Welcome to Sandra's Accounting Channel. This episode will be discussing the depreciation. Check it out! So, what is depreciation? Depreciation is an estimate of the loss-in value of a non-current asset over its expected working life. It reflects how much of the non-current asset was consumed in the accounting year. So what is the reason behind that we are doing depreciation? Number one, because of physical deterioration, where the non-current asset is being wear and tear, which lose its value over the year. Number two, it's because of obsolete stocks, when the original asset can no longer perform its function, then the company have to depreciate its value and replace it with a newer version of the asset. Number three, because of the legal life of the asset. When a lease on a property, it means that the property may have a certain amount of years attached. For example, like a printing machine. So we have to depreciate the printing machine over its contracted years. Last but not least, depreciation is due to depletion, where the asset will run out someday, such as oil well and deforestation, which can cause the forest to run out one day. There are a few methods to calculate depreciation: straight line method and reducing balance method. Let's look into straight line method first. This method is useful for assets which provide equal benefits for each year of their useful life, such as fixture and fittings, property and equipment. So the net cost of an asset is written off in equal amount over its life. There's two ways to use straight line method. Number one, you can use cost minus residual value divided by expected life. So residual value refers to the estimated value of a fixed asset at the end of its lease term or useful life. Number two, you can use cost to minus residual value and then multiply with the depreciation rate given. So which formula to choose is actually depending on the information provided to you in the question. By using straight line method, you will get the same amount of depreciation for each financial year. On the other hand, reducing balance method is useful for assets which provide greater benefits in the first few years and then repair and replacement are needed, like motor vehicles and machinery, where more depreciation is charged at the beginning of an asset's lifetime and less is charged towards at the end. This method is using predetermined percentage to depreciate the asset. As you can see that annual depreciation is equal to the net book value of the non-current asset multiplied with the percentage given. So how to get net book value? Actually, net book value equal to cost minus accumulated depreciation. So if you expand the formula, it will become cost minus accumulated depreciation multiplied with a given percentage. By using this method, depreciation charged annually will be different in a way of reduction. Alright, let's look into an example. If equipment was bought for 23,000 ringgit with a residual value of 3,000 and to be depreciated at an annual rate of 20%. First, we have to find out the cost to depreciate. So in this case, it will be 23,000 minus 3,000, the residual value, and you will get 20,000. Means that we will only depreciate the 20,000 of the asset. You can see from the example, if we use straight line method, the annual depreciation charged for each year from year 1 to year 4 will be the same. However, annual depreciation charged by reducing balance method is different every year. Depreciation is reducing from year 1 to year 4. As you can see that straight line method is easier to calculate compared to reducing balance method. So if you are using the reducing balance method, make sure that you use net book value to depreciate the asset instead of using the cost. Alright, let's have a quick recap. So depreciation is the reduction of the value of non-current asset. Straight line methods suit non-current assets that provide equal benefit for each year, where annual depreciation will be the same. However, reducing balance method suit non-current assets that provide greater benefits in the first few years, like motor vehicle and robots, so the annual depreciation is getting lesser and lesser in the following years. 看完了吗？如果觉得不错的话，请记得给我一个 like、share 还有 subscribe哦。See you in the next episode. Bye bye.